All right, what is up, tycoons? What's up, traders? Super excited for today's video. I'm going to give you guys an update on ticker symbol YFII. This is the DFI.Money token. And if you missed the last video, you would have known that we were bearish below 1413 and most likely going to come back down and retest our demand zone. And that's exactly what we've done. Now, what I'm going to do is give you guys an update on the current price levels, the things that I'm watching, as well as, go over some of the different strategies and tools that you guys can use to help give yourself an edge in the market. Trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal and know how to use those weapons so that way you can increase your odds of success on the battlefield. With that being said, smash the like button, subscribe to the channel if you guys are new. Remember, none of this video is financial advice, rather just trying to give you guys some good information on supply and demand zones, using the fibs, using the RSI, and how you can combine all of these things together. So that way you're not caught by surprise by any of the price action. So the reason that I said we were going to be bearish below 1413 in my last video was because these three levels right here, the 61.8%, 50%, and the 38.2% levels, these are the three most common and well-respected Fibonacci retracement levels. Right. And so you use these to identify trend continuation versus trend reversals. Now, what do I mean by that? Well, what I mean is that nothing moves in a straight line down or in a straight line up. Rather, you get a move down retracement, continuation of the trend, or you get a move up retracement, continuation of the trend. Right. And so the fibs are going to help you spot trend continuation. And you can see that we had this very big move down. We retraced up to our major retracement levels, and we're now continuing that trend as we're putting in a low, and now we're putting in a lower low. And we just recently tested the bottom of our demand zone and saw some buyers step in and push price up, but things are pulling back once again. Now, you can also use these to spot reversals. So let's say you move down, retrace, and then you consolidate and break through those retracement levels. That's how you can spot an upside reversal, which is what we were looking for to potentially hit our bullish price targets. But rather than getting that, we didn't get the follow through and we got the trend continuation and we rejected our major fib levels. Okay, now another thing that I like to use is going to be the RSI, which is right down here. Now, if you don't know, this stands for the Relative Strength Index, and it's going to measure the relative strength of a token at its given price. And so we initially had a bearish divergence where we created a high right here, okay, and then we created a higher high. So clearly the token was in an uptrend making higher highs, but if you look, we had a high and then we had a lower high, which is a bearish divergence indicator. You may see some bearish activity. And we saw a sharp move to the downside after two signals, right? One, rejection of the 50%. And number two was the bearish divergence. Now, I mentioned that if we wanted to see a bullish breakout and a potential to hit our bullish price targets, we needed to see a breakout, retest, and push back up higher of our bearish divergence trend line. And I also mentioned that what you did not want to see was a look above and fail, which is exactly what we got. And the reason a look above and fail is significant is because at this point in time right here, bulls are fully presented the opportunity to really push price higher and hit those bullish price targets. And so they should, flip this resistance line to support, but rather than doing that, they actually broke through. And I mentioned that a look above and fail is going to be a bearish signal because essentially what it's showing is that bears are in full control. Even when presented the opportunity for a breakout and to push things higher, the bulls did not take advantage of that opportunity, and rather the bears came through and pushed price lower and really pushed the relative strength down. And you can see that all of that stuff really played out very well, nicely together, right? We had the initial bearish divergence combined with a rejection of our 50% level. And then we got to look above and fail. And I mentioned that below 1413 is really where we're going to be bearish below there, because anything below there, we have a high chance of continuing the downtrend and retesting this demand zone here that we are currently testing right now. Now, being that we're testing our demand zone, there is a chance we could consolidate here and push up. So this is a high level of interest. And what you're going to do is basically 1,000 is going to be the line in the sand, right? That's the bottom of your demand zone. And if we break below 1,000, the next price target, which would be a bearish price target in this case, is going to be right at $800. Okay, 797. As you can see here, that's where we previously bottomed out at. before an amazing, really big rally to the upside of over 100%. So, keep an eye on this area here, the 1000 to 1100 region, right? This is our current demand zone where we found demand and found buyers in the past previously about 3 or 4 times. The more times you test the demand zone, the weaker it gets. So keep that in mind. What you want to look for is consolidation, absorption, and then ultimately a push back up higher. But if we break through this demand zone, again, the bearish price target is going to be down to about that $800 region. If you pay attention as well, the RSI has still been rejecting this trend line many, many times after the initial look above and fail. So it's still a very valid area of resistance when it comes to your RSI. And if we do get the breakout, guys, we want the breakout, retest, and push higher, and not another look above and fail. A look above and fail is going to be a bearish signal, just as it was in the past. So hopefully you enjoyed this video and learned something new. If you did, smash that like button, subscribe to the channel if you guys are new. With that being said, I'm out.